What a great wave of happiness we just received with these pictures. Were you smiling when you're looking at them? Do you feel weird seeing these crowds of people super close to each other? It is crazy how the past year has changed our link to the world and to others. Hopefully the desire to continue to explore is still part of us and will be satisfied shortly. Thank you very much for joining us again today. I'm Elsa, head of the Strategic Partnerships team of Encore Travel. We have been serving corporations in Canada and in the US for 34 years and counting, navigating through the ups and downs of the industry and the world. We have been and always will be your trusted advisors should you want to implement a duty of care program, benchmark your travel and expense policy, increase program adoption, or put plans in action to generate savings and optimize your travel budget. Whatever you need, we will always go out of our way to make it happen. The mission of my team is to improve your program performance through various strategic initiatives with analytics, communication, support, and vendors relations. The heat of the pandemic gave us the chance to undertake projects that we have been waiting to have the bandwidth to properly execute. The implementation of a new reporting platform, the soon to be launched customer success desk to facilitate travelers' adoption, the addition of new products in our portfolio, such as airline credit management, and an improved communication plan to make sure you stay well informed about everything you need to know should you travel soon or not. Travel management has value to be looked at even today, and you can count on us to make the most out of the opportunities out there to improve your programs. It's my pleasure once again to introduce you to Fred Gattali, a priceless asset within the Strategic Partnerships team. Fred holds the position of analyst for client solution and insights, and he's our in-house expert finding and tracking opportunities and drawing trends to stay on top of innovative solutions that improve the quality and relevance of your travel program. Fred is the brain behind our team, and we wouldn't possibly be able to do what we do for you without him. He has worked super hard over the past couple of months to prepare this event and organize a slightly different format than the two previous webinars. So the first part of today's session features a special guest for the first time, and we have the pleasure to welcome Mr. Billy Kyriakopoulos. Billy holds the position of Director of Corporate Sales at Air Canada. He started his professional journey, let's say some years ago, with US Airlines and then joined the troops of the flag carrier 10 years ago. He will be sharing his experience and insights with us in a short time. A little note before we jump into it, this session is recorded and will be shared in our next newsletter. In case you have questions for us or for Billy, please use the Q&A system by clicking the question mark icon on the top right corner of your screen. We will take questions after the interview and answer to the best of our abilities in English et en français, bien entendu. We're beyond pleased to have you all here, and without further ado, the floor, or screen I guess, is yours, Fred and Billy.
All right, thank you, Elsa. Thank you for that introduction. I'm humbled. First, thank you for everyone for attending, and I'm very happy to be here today presenting sort of my findings and some of the research I've been going through in the past regarding travel, as well as very happy to have Billy here from Air Canada. So if you have any questions for him at the end, please submit them throughout our conversation with him, as I have the conversation with him and as I ask him questions. And if you have something in the end, also we'll be able to facilitate some of those questions. So I think we can go right back into it and introduce Billy. So Billy, how are you doing?
I'm very well, Fred. Thank you very much. Merci.
Good. Because I wanted us to jump right into this, and I'm sure many of our viewers first want to know, what does Air Canada look like right now? What are some of the signs that you're currently looking at that might indicate a positive or maybe even a negative return to travel right now?
Well, sure, Fred. I mean, I think, certainly this has taken a little longer than anyone had imagined, over a year, almost a year and a half ago now. But I think for Air Canada, a lot of the efforts that we've had over the last 12, almost 18 months now has put us on the right track to make sure that we get in front of this return to business travel, particularly with a great footing. So a lot of the effort that we've done over the last year has been ensuring that the whole experience on travel has elevated to the point where people are feeling comfortable and safe to travel, and then being able to clearly put together policies and processes that enable our business travelers, particularly, to be able to start the new way of travel moving forward. So a lot of that focus has been on technology, on a touchless experience, and an enhanced offering as people start returning back to their offices and returning back to the skies.
And so you mentioned, you mentioned some of these big changes. What has been the sort of cost benefit of some of these changes regarding, what have you given up that have come up in the last year, and what have you gained in the last year from Air Canada?
Well, I think for everyone, if somebody, certainly on the call has been on a flight over the last year, there has been some direct changes that are noticed right away. Everything from the onboard service in terms of meal and beverage that had to be curtailed back, as well as the lounge experience and even being able to access the lounge. So there's been a lot of items over the last year that have been pulled back from that side. But over the last few months, the technology has improved, our offering has improved within those spaces, and has certainly gotten to a level where it's much more comfortable, much more pre-COVID-like in terms of your experience at the airport. In terms from what we do as a business, what we've been pushing forward over the last little while has been to ensure that there's flexibility in our corporate business, if you will, and our business travelers, so that they have a few more options, a few more tools available to them when they are traveling, to be able to have that experience go pleasantly.
Now, some of these changes, obviously, I assume, some of these might have been accelerated. Were these changes that, regarding maybe some of these cleanup measures that obviously are very much COVID specific, were some of these technological changes and innovations something that were in the works for Air Canada, or is this really brought on by the changes within the past year because of COVID?
Well, I think for Air Canada and for aviation as a whole, safety and cleanliness has always been paramount, right? This industry survives on safety, and cleanliness is an absolute paramount. So they go hand in hand. You can't do one without beginning to do anything else. And a lot of the innovation that existed pre-COVID was from mostly the business traveler that wanted to have a more seamless experience at the airport, whether not only at the airport, but even getting to the airport, on the plane, even how they book their flights, to be able to have fewer touch points, fewer interactions within that space. So that has all been worked on for a number of years. And I think this period of COVID gave us yet another layer where we added additional opportunities to implement measures that were always something that we were looking for. Including entrance into the lounge, where you no longer need to go to the gate, to the agent, that you can go in through the technology that we have, even be able to pre-order meals and whatnot. So those items have been in the works for some time. This, like other crises in the past, has been able to give us a springboard to get to where we are today. And certainly adversity always spurs innovation, and it's no change here at Air Canada that we've led in this effort as we have in the past.
Good. So, some of these changes, obviously these big technological changes, I know that Air Canada recently tested out facial biometrics technology at the San Francisco airport. So I'm wondering, is, when you're thinking about this rollout of these new technologies, are you thinking of, different impacts depending on where you are? So some of these technologies acceptable more in the US, for example, versus Air Canada? And what are some of these impasses that you have to go through, or some of these hurdles that may be Canada specific versus, let's say, elsewhere, such as the US?
Yeah, no, I think it's a great question, great point. It's an item I really enjoy. There's been a lot of work in places. You mentioned San Francisco, the project there Canada was on, but throughout airports around the world, in Hong Kong, in Atlanta, in Frankfurt, where technology and the likes of facial recognition or temperature checks or whatnot have been put into place to speed up and improve that process. And I think that is key. If we're developing technologies that make things easier, that help remove obstacles, if you will, for the traveler, particularly the business traveler, then they're working in the way we want. And Air Canada continues to push that for future, and we are a very large advocate in terms of what's going on right now, as I'm sure many of your guests here on this call would know. Where there's a talk of, a vaccine type passport or other measures like that will give the technology and the ability to move through airports with greater ease. All those technologies require, a consistent approach, and certainly we're going to follow the governing rules within Canada, but also through the IATA rules and other items that get in terms of governmental implications throughout the world. But there needs to be consistency, or you'll have less of a willingness by the traveling public to make that more of a reality. So I think one key focus that we're going to be working on is to have full alignment on the not only from the airlines, but the airports, the TMCs, and other key stakeholders that make these kind of technologies a reality.
Right. So I agree with you on the terms of that. For a faster recovery, we do need alignment on all facets. And, given that you're in corporate sales, I'm really curious to know, do you find any difference in consumer attitudes, regarding, going back to travel between different destinations? Again, I want to compare the US and Canada. Do you find that it's easier to market and to get things rolling in the US versus Canada? And how would that affect your overall? How does that affect your overall strategy?
Well, certainly, I think for the short term, it does affect it, right? So, we're very much in the middle of a third wave here in Canada, and there's some, very real restrictions. So the traveling public as a whole, but particularly the business traveling, have a limit to where they can fly. So international right now is not an option unless you're essential travel. And domestic, there are enough restrictions that, that put certain hurdles for travelers to be able to fly across country with ease. But we look at what's happening in other parts of the world that have already, I won't say put COVID-19 behind them, but certainly have been at moving forward. So places like Australia, like New Zealand, and even now intra-US, we're starting to see travel come back, in good numbers, particularly, from the small and mid-sized organizations that tend to be a little more nimble and want to be out there meeting with their customers. We are all still in the business of meeting face to face, being able to understand our customers and be able to sell our products and interact with our own team. So I think we're starting to see that now. And as the vaccine rollouts continue throughout Canada and the world, and case rates go down, we're already starting to see that, as early as September and October, there's interest in some of this style of travel. And, from what we're seeing around the world, where these measures have been lifted and vaccines and testing are working well, we're in a good position to get back strong.
It's good that you align yourself well. I wanted to switch things a bit, and I've noticed that we've had these lower cost airlines, or I should say smaller airlines, sort of, especially in Canada, for example, with Flair Airlines increasing their routes into major cities. So, doing, for example, a Halifax to Montreal flight. How does that change the way you think, about the routes that Air Canada has right now? And do you see it as competition? Does it change your strategy regarding these smaller airlines?
Well, certainly, we see all competition as something that we look at, and competition is a great and healthy thing. When all things are at the same level and everybody's competing in a fair place, competition is a great thing. We're a firm belief that Air Canada has excelled and been consistently ranked as among the top 10 airlines in the world because of competition. Competition makes us more agile, smarter, be able to do the right things for our customers and look out for our customers first. So I think new entrants, not only in Canada but around the world, whether it's low cost or ultra low cost, is something that we always have on our mind. But our fundamentals in terms of our approach and our strategic business plans continue and will remain the same. We will look at competition and adjust accordingly where needed. We have all the tools in our portfolio to help us through that. But we feel there's always room for good competition.
Good. All right. So I wanted to know something that's on everybody's mind is this recent announcement of the Ottawa loan of $5.9 billion to Air Canada. When you look at that amount, we've had talks of refunds going back to the customers. How does that affect the operational standpoint? Is this viewed as overall positive? Do you see any further effects on the customer themselves, higher pricing, lower pricing? What does this mean exactly for the corporate traveler?
Well, look, certainly we're pleased with the deal that we have with the government. The loan, as you put it, is actually more of the ability to access those funds. So we have not accessed those funds, and we might not, regardless, because we have a very strong balance sheet. And this gives us just some greater flexibility to do a few of the items that we wanted to do, as this pandemic obviously has lasted much longer than anyone had hoped. It also gave us the opportunity to work very closely with government, which had taken some time, but we're in a much better position now to find a good roadmap together with government on how not only Air Canada, but the aviation and frankly the travel trade business as a whole emerges out through this pandemic. Certainly the point on the refund is, I think it's been reviewed very well by our travelers and our corporate travelers. In many cases, each corporation looks at their own way they run their business and make use of goodwill policies or other items that exist. But if a refund is something that they're looking for, that's available. And I think it's helped everybody feel that there is, a defined step on where we're going moving out of this, and we can put COVID-19 behind us and find the right way together to move forward as business will certainly come back. This is a vast country. And air service is paramount. So we want to be there with our business travelers, with our travel trade community, to make sure that we're working with them to get to that space.
Right. Good. And so we talk about refunds and the customer and the Air Canada client. What is sort of your feedback or what you think in terms of accessing more markets in the future, right? So I just gave you a point of low cost airlines sort of accessing your bigger markets, increase the competition. What is the future? Where does Air Canada stand in terms of accessing more markets versus sort of going back into the markets that they were currently reduced out of due to the pandemic?
Yeah, so I mean, certainly we have already established a plan, and some routes are already coming back as early as June domestically, and some more internationally. Many of those are certainly going to be related to government restrictions. If we don't have the authority to fly to a country for whatever reason, we wouldn't be flying there. But Air Canada is a very strong, obviously, domestic carrier into transborder markets, and of course internationally. Prior to the pandemic, we served over 100 markets around the world. You will continue to see Air Canada come back to many of these markets, and in many cases fly to more markets as one of the areas that has spurred more demand, if you will, is a lot of travelers that are looking to visit relatives and family and friends. So a lot of markets that you wouldn't have seen in the past, you're going to start seeing more so in the future with Air Canada. I think you're also for the next 6 to 12 months going to continue to see us working very closely with our joint venture partners, United and Lufthansa Group. And in many cases, like many airlines around the world, what was once a nonstop will likely be a connection through Frankfurt or through Chicago or San Francisco or Munich in the next short term, as we finally get to a place where there's a more consistent approach to travel and we're able to expand to the full network that we had pre-COVID.
Good, good. So, you know, one thing we talk about a lot, again, you're talking about the leisure traveler, which we're all expecting to be the first people out of the gates, right? Running straight out of the gates for these destinations. What does it look like for the higher end markets? So the private jet market, what does that look like for Canada? Is this still a very favorable standpoint from where you see it? Has that increased maybe during the pandemic? Maybe corporations fly more private than before? How does that market look?
Yeah, no, another great question. I think the you know, for those that have dabbled in the private jet or finding alternate ways of travel other than the commercial aviation, quickly find out it's an expensive item, and there's not a lot. There's some players within the the global space in this, but it makes it a little more difficult to bring your people with the private jet at a cost-effective way. So I don't see it in the future being anything more than what it was in the past or through other crises that have existed. I think it suits and fits a good need for bringing key executives to places that there isn't service or limited service. But even those modes of travel, if you will, still have the same restrictions in going into countries than commercial. So I think there's less, at least from my perspective, a less likelihood that you'll see this spur, particularly in Canada, with any great volume. I think you'll likely see more commercial carriers, maybe in niche areas, start to consider an operation, but less likely than a private jet.
Okay. And I just wanted to touch last on pricing, which I'm sure many of our viewers care about. What does pricing look like going forward? Should we expect higher pricing as we get out of this, as demand increases, and therefore you have to increase your supply, or should we assume that these prices will stay stable going forward? Sort of what is Air Canada looking at right now?
Well, I think price point for any market, even in Canada, has always been driven by competition and supply and demand. I mean, those are first and fundamentals. I think certainly over the last 18 months, particularly in 2020, fares actually went down. And yes, 2021 is starting to see some increases versus 2020 levels, but still not at the 2019 levels. I guess I should ask, should travelers be rushing to book right now versus in 4 months?
Well,
if you're going on a holiday, I would book now because there's some great deals out there. But I think for your corporate audience, I think for the next short while, we're seeing this, and I'm sure your audience and you as well. Bookings come later, with a shorter window in advance, and I think people are looking to buy the right fares that provide the greatest flexibility. Even though we at Air Canada have provided, especially just a couple of weeks ago, a great policy for bookings after April 13th, but I think you're going to continue to see that, and I think pricing will remain competitive because as airlines come back, including Air Canada, there will be more demand out there, and airlines will be looking to put people on aircraft. And I think difficult to say that this crisis will resemble other events historically in aviation, but if that holds true, I would not expect to see a spike. Certainly not in 2021.
Good. I'm sure a lot of our viewers might be happy to hear that. Elsa, do we have any questions for him from the audience?
I was looking at the Q&A and there is none, actually. So please note that Billy will have to go back to his day to take care of you. So he will not stay until the end of the webinar. So it's really a now or never thing if you have any questions for him. Fred and I will still be there for you until the end of the event. So I'm going to maybe give a couple of minutes more if you want to rush into that Q&A section that is on the top right corner of your screen with the question mark. Other than that, that was a super interesting interview, Billy and Fred. Thank you for preparing this. I'm happy to know that we should book vacations right now. It will give ideas to many of us.
Well, certainly, you know, looking at that video on the intro, Sardinia looks really exciting for me. So I know many feel the same way, and why not book with confidence right now a great trip?
Exactly.
I think all of us, as our specialist was putting together the video and we saw it for the first time, our whole team was grinning the first time we saw it, right? We're all very happy to we're all looking forward to get out there and have these international trips and really be out there.
Yeah. Well, I think the no question means that it was super clear. So thank you for the quality of the answers, Billy. Thank you for the quality of the questions, Fred. So we will now start the second part of our event.
Thank you so much, Billy. It was great to have you.
Thank you, Fred. Merci beaucoup.
Merci, Billy. À bientôt.
À bientôt. Merci.
So here we go. Thank you, Michel. We will now start the second part of the event. So that will be more focusing on the finance and the innovation sides of our industry. Fred looked after the trends from the airlines and translated them into meaningful impacts for the traveler. So, for example, what does the decreasing revenue generated by airlines mean for the future experience? Or how will the growing depth of carriers impact the service offering? How much technology will force its way in our traveler's journey? All of these are questions that you will soon get an answer to. And Fred, we are all ears.
All right, thank you, Elsa. Just to start off, I think it's always important to give some contextual background to the situations we're in, you know, to provide context around the impact of COVID in the last year. And so I find it important to frame the discussion around, you know, the tangible figures first that showcase the drop that was last year. One is to say, you know, for example, the sector itself supports 1 in 7 jobs directly and indirectly across the world, right? In 2020, airline revenues totaled around $328 billion, which is 40% of the revenue seen in 2019. So to compare these revenue, these were not figures that had not been seen since the year 2000, right? That's a 20-year wipeout in less than a year. So the sector is obviously expected to be smaller for a few years to come until it reaches back to 2019 levels at the least. So current projections see that traffic probably won't return to 2019 levels before 2024. So additionally, there was just to go further, there was a 64% reduction in passenger volume compared to 2019, which was mostly helped, I would say, by some recovery within domestic travel through these low COVID rate months of last year, right? So for example, some of the summer months between July to June to August, I should say. And additionally, you know, we have about 81% decrease of volume of connecting passengers, while non-stop traffic went down 61% year over year. Now, I put this because I find it important to know that, you know, this really showcased the movement between airports, you know, throughout the past of last year. Non-stop traffic went down less, obviously, because people were more willing to take direct routes due to their uneasiness regarding, you know, regarding the amount of touch points and the amount of time they spend within transit to get to their destinations. So when you look at some of these Canadian, one of these major airlines such as Air Canada, Delta, United American, you know, it went down on average, you know, 65% last year in terms of revenue. Now, you know, many in the sector accept that probably a chunk of the business travel will be lost as well. But with the vaccination programs being rolled out globally, there is really little agreement on how much that loss will be or how long the fallout will last. So what it really comes down to, and what is important, is to know how many people will choose not to travel when they can, right? So for this time period in between, for this adjustment period that will be needed before corporate travel makes a rebound, airlines are looking to open up more routes to leisure destinations to offset the ones lost by the decline in business traffic, right? As they scramble to sort of redesign their networks. Now, just go back to that. Now, what does the changes in operations look like for some of these, right? So as I said, airlines are making changes to operations to accommodate new travel patterns. They are, for one, might be a necessity for a change in pricing logic. So, for example, today most carriers price point-to-point nonstop flights are at a premium, right? Travelers who value time over price, which usually tend to be business travelers, book these nonstop flights. Leisure travelers, on the other hand, even those traveling in premium classes, are more price sensitive and may choose an indirect routing. So what this means is that in order for airlines to get and to narrow that price point, there will need to be some pricing differences or pricing narrowness between those indirect routes and the direct routes themselves. Second, there will need to be a change in airplane configuration. So with the resurgence of flying, the type of traveler who dominates or who's needed by airlines will change, right? So currently, right now, most of the revenues of airlines do come from business travelers, the huge chunk of it. So what airlines will have to do, especially in the short term, given that you'll have a much larger percentage of leisure travelers, you will have to, some of these airlines may look at changing the layout of their cabins to address the increased share of leisure traffic. So at the simplest level, lower business class demand may mean smaller business class cabins. So if you take this further, products may shift to better cater to premium leisure passengers, such as the growth of premium economy cabins or the development of business class seats, more suitable for traveling as couples or groups, right? Additionally, what you find is that because, again, airlines have added many flights over the past few years between hubs and smaller cities, using these smaller size wide bodies, planes, right? So this is planes such as the Boeing 787. These flights usually work because of the high yielding business demand. But with business demand decreasing, the economics will actually more favor larger aircrafts who are flying less frequently to these smaller destinations, right? So airlines may find that larger aircraft, such as some of these Boeing 777s or these Airbuses, which usually have a lower unit cost, become the base of the long haul network. So meaning bigger planes flying to smaller destinations, but less frequently. Additionally, I think what's important is we've talked about the idea of high debt levels that some of these companies have taken on, right? What I find is many airlines have had to borrow huge sums of money to stay afloat and cope with high daily cash burn rates. So here I put a few of big US and Canadian companies here, and I've tried to show the daily cash burn, right? So Delta has $25 million, American 35, United 33, Air Canada $17 million a day in cash burn, right? That's significant, right? And obviously the reason I should say that cash burn is an important measure because it monitors liquidity in order to assess the company's cash needs without the impact of certain extraordinary actions or events. And it's something that the company believes provides useful information to investors about the liquidity and their ability to keep functioning for the future term, right? To keep being a going concern. Now, tapping into state-provided aid with credit lines, bond issuances. Now we've seen this in the US and recently in Canada. The industry collectively amassed more than $180 billion worth of debt in 2020, right? Which is a figure equivalent to more than half of the total annual revenues that year in the US. So on the chart here, you see the chart showing the debt levels between what's expected in pre-19 and what's expected up to 2024. So here you see an increase of starting off at a starting point of $632 billion in net debt by the airline industry. And given COVID, there's an additional 183 debt that's been raised in order to keep the function of these airlines, right? And additionally, these airlines are reaching into their coffers for increased equity raises, right, to announce it. Then they're also amounting net cash flows and interest payments and all these capital expenditures, which they need, you know, to get new planes, to sell their own planes, to keep their operations to a minimum product while allowing for the safety of their passengers to continue. So what you'll have is basically, you know, $632 billion initial debt levels up to possibly $1 trillion by 2024. You know, these costs, by the way, will need to be recouped at one point. So as the conversation we just had with Billy, it's that in the short term, you know, these ticket prices might not go up, right? Or you might not have such large fluctuations in ticket prices, but eventually you should see some ticket price rise as some of these costs are moved partly or partially to the customer. So by this estimate, you should expect that at least the rise in ticket prices, you know, amount to at least 3%, assuming that some of these debts have a 10-year repayment window, only for the additional debt that they take on during this period. So furthermore, when demand for air travel returns, it will likely outpace supply initially. So we see a glut of latent demand of people eager to travel. So it will take time for airlines to restore capacity, and bottlenecks such as delays in bringing aircraft back to services and crew retraining could lead to a supply-demand gap, resulting in higher short-term prices sometimes. But in many cases, what you'll find is these airline rescue efforts come in the form of these government bailouts, which with strings attached. So we're seeing a reemergence of or increase in the level of state ownership and influence. So in Europe itself alone, you see Air Portugal, Lufthansa, Air Baltic. These all received state aid combined with an increase of reintroduction of government shareholdings. So again, this is a huge reshuffle, I would say, in terms of, you know, I don't want to say autonomy, but the way the airline industry functions. If you're getting more government interventions, higher access to debt, it creates more stringent operational standards for some of these airlines, which would move into the customers, or which will affect the customer or the corporate travel or the leisure travel in pricing. So now what we've seen and what we've heard recently is that, you know, even though these high debts have gone up, the news on the vaccine sort of makes these airlines more confident in their baseline forecast for how the second half of this year will go. So with this in mind, airlines could stop burning through all this cash by the end of next year, and they may even at an industry level get to being cash positive, if possible, by the fourth quarter of this year. So just quickly, what does all this mean? What I just talked about. So what it means is there will be some deep restructuring, right? Companies will continue to aggressively reduce operating costs and increase this free cash flow. Most airlines have already, evaluated these costs to the smallest details in order to manage their cash burn. So as I gave an average of, let's say, $25 million a day, that's currently right now that these airlines were burning each day. It came from, a high of about $50+ million daily. So these companies, these airlines have found a way to gradually decrease their cost in order to continue operations. But what will be most important, what will be most fundamental, is that they will need to alter their long-term cost per available seat kilometers to create long-term winners from the pandemic. So the winners out of this pandemic will be those that are able to most effectively manage their costs. Another way that companies are dealing with this high debt level is that they're raising equity. Now, raising equity is going into the stock market and asking for money and selling your shares for and essentially giving part ownership of your company to investors. Now, the reason and the problem with this is that raising equity is difficult and expensive. But again, the current problem is that the leverage levels, which means the debt levels, are very unhealthy. Very high debt levels will deter an investor from actually investing into the company. So the companies, also these airlines, have to play that balance game between the two. But, you know, as it's needed, these airlines will have to take the opportunity to attract equity from new sources or think again of different structures to attract cash once revenue stabilizes. Now, when you're dealing with mergers and acquisitions, this is another part of that's important that's happened in the past year. Now, the mergers and acquisitions, which is the act of companies acquiring other companies, you know, for different purposes to increase revenue, to increase their traveler base and so forth. The environment in the past year has not been the best, and the reason being that some of these companies that had these mergers in place or acquisitions that were planned did not go through with it, just to the fact that the current environment values everything much lower. So you have the acquirer that has much less cash, much less access to cash, because they're in a struggling situations where they have to cut down on the cost. And on the other side, the acquiree, the company that's being acquired, does not look as attractive anymore, right? Their routes have decreased. They don't have as many passengers they used to have. So all of this to result in a large decrease in deal making. Now, when you look at 2021, the environment could actually be ripe for, you know, for the mergers and acquisitions, M&A, to rise, right? The problem is that sometimes many deals in the past have not been approved due to anti-competition issues, right? Noting, for example, there was a deal between Alaska Air and Virgin America in 2016, which had a tough time getting through because the Justice Department in the US had concern about fares going up and mergers being anti-competitive. So I don't expect to see a wave of mergers necessarily, but what I do expect is that among the smaller airlines, you could get such as what's called the merger of equals. So, for example, you know, you have low-cost airlines such as Spirit and Frontier Airlines, or let's say a JetBlue merging with Alaska Air. I'm not saying this will occur, but what I'm saying is that it probably will not happen with larger carriers, as they have a much more operational changes to make within themselves before thinking of larger, before thinking of acquisitions, which might be probably the reason. Now, this is me hypothesizing here that the recent Transat Air acquisition by Air Canada did not happen. Now, as I said, the likeliest takeover candidates are usually, you know, carriers with hard to replicate route networks, good access to restricted airports, or those with fleets that wouldn't cause undue financial risk, and those where labor issues could be more easily addressed. Because generally what happens is airline mergers are very messy and rarely create significant cost synergy. In fact, at times they create cost dyssynergy because labor often has to be accommodated to make the merger work, or a higher cost airline overlays its cost structure onto a lower cost one. Instead, usually most mergers, are based on revenue synergies. So this is a part of the financial impact that, you know, as a traveler, you might not be aware, but the way it affects you is that, you know, in this next year is that if these mergers do not happen, what it might mean is possibly for 2021 at the least, is that you might not get these higher price points that you would have probably expected to see had these deals taken place. So you can revel in the fact that as a traveler, okay, you have a little bit of a price increase delay, you know, between these 2 years that maybe might go up next year. Now, as we talk about technology, it's important to go through technology integration. This is a talk that I just had with Billy about this, and the idea of faster move through airport and the need for digitization has never been more needed, right? So in a scenario of an international traveler that has to present perhaps their passport and visa, then additionally their passengers' coronavirus paperwork, which includes passenger location forms detailing where people have been, and a proof of a negative COVID test, this makes the process a lot longer. What you've seen, I just saw a recent example with Heathrow Airport in London, which was having problems where persons traveling during COVID could spend in excess of 2 hours and up to 6 hours getting through passport control, right? This is not sustainable for an airport that is currently not receiving non-essential travel, and where only about 10,000 to 15,000 passengers are landing daily, which is a tenth of normal levels, right? So it's important that airlines and airports get these digitization efforts and make sure to integrate these digital applications to make the passenger's journey not only as fast as possible, but as safe as possible. So what are some of the things they're doing? They're doing facial biometrics technology, which scans your face and recognizes you, right? This means that it's a much more streamlined experience, paperless and efficient boarding experience. Now until recently, this technology was only used for check-in and exit checks, but with a match rate of almost 100%, the technology has now been extended to baggage drops and has been adopted by individual airlines for boarding processes. Additionally, what some of these airlines have put into place is Internet of Things, so tracking passengers for crowd control to make sure that airline areas or airport areas are never too overcrowded. In addition to other sort of technologies has been low-touch nexus points, easy, I should say, easy accessibility for safety purposes. So you have robots, for example, creating cleanup measures for throughout the airports. So all these technologies put together are very important for innovation, and it will increase the likelihood that travelers get back to their journey very quickly and that they feel more safe doing so. The big part which I thought was important to sort of dedicate a lot of time to, or should I say slide to, is the idea of data innovation. Now, the airline sector traditionally is based on old pricing models that sort of repeat themselves, meaning that the pricing models for what you get this year are only added, for example, 2% for next year prices, right? But what you have right now is with the expansion of data innovation and data sources, airlines and airports are not using satellite imagery and maps to change the way they get the data. They're using consumer sentiment videos. They're using analytics and traffic from the web. They're changing their financial analytics and doing a lot more analysis on it. So this includes things such as credit card spending. And how this translates to the customer is that it means you'll get more accurate real-time pricing models. So you as a customer will always get pretty fair prices, right? You get an idea of more fair pricing happening for the traveler. And what also mean is that with the idea of this increased competition and the availability of more data sources, you as the consumer will be put more in the forefront, right? Your journey will be shorter. The way you interact with airlines and airports will be more seamless. And lastly, what you'll have is a much faster journey and refined customization for each traveler. So all this put together to say, we've seen the impact of the airline industry and what it has meant for travelers not being able to go anywhere, especially with the enacted government restrictions. But what will this mean for the traveler is you might actually, at least in the short term, I should say, from my review, get a much more favorable outcome coming out of this pandemic. So that means, obviously reduce rent cost, accept to stay at home while you can, but in the long term, this might not be such a bad workaround for you as a traveler, and especially as a corporate traveler. So I will say thank you for your time. If there's any questions, I don't know, Elsa, if there's any questions, I'd love to hear any if there is.
There was actually one from the first part that I unfortunately missed. So I'm sorry, Kathy. I'm going to take the question right now. Your question is concerning tickets refund. Is there a specific budget allotted towards the refunds where a claim would not be eligible due to an exhausted budget? So as Billy mentioned, the loan is not really a loan that the government approved for Air Canada. The money has not been transferred yet. So I guess this is like a guarantee that everything eligible will be able to be honored. You can take that as a guarantee. And then the second portion of your question goes as follows. Do the claims need to be made within a specific period? Yes. As a travel agency, we are speeding up everything we can so that it is completed on time. Our deadline to complete all the refunds requests is June the 10th. And it is the same deadline that you have as an individual traveler as well. If you have like tickets for personal vacations, for example, that are eligible for that refunds request, you have until the middle of June, 10th of June, to go forward on Air Canada's website. They have a section, super clear section, to go ahead and request your refund. That being said, I've been informed also super lately this morning actually that Air Canada is following, Air Transat is following the same path, and now opens credits to refund eligibility as well. So we are seeing kind of a trend that Air Canada started a couple of weeks ago. Air Transat is following. So let's say we are keeping up to what's happening in Europe as well. We also opened a quick survey. If you want to let us know what you thought about this event, we would be super happy to hear from you. So it's an easy process. You just take from your phone, go on slido.com. The number to leave us your appreciation would be the number 92073. I'll need glasses soon. Just a quick way for us to know how it went, how much usefulness you found in this event. So if you have any questions, go ahead. I have the chat open this time, so I will not miss one. And otherwise, you always know how to reach out to us at encore.ca. So I'll just maybe a little one more minute. That will give me the opportunity to thank you very much, Fred, for your work, for this great presentation, these great insights as always, and we all look forward to reconnect with you in a couple of months, hopefully after the winter is over, but after the summer. And wishing you all great summer vacation, some rest, and quiet and happy times. Thank you all, and have a great day.